I still think it's crypto spring. We're not yet in summer, but you're just getting the later stage of spring where you start to have a few nice days in a row and it starts to feel good and you start to think about, having drinks outside in the pub and, doing things in the sun. So that's at that point. It usually really doesn't get going. This is usually the prequel. It usually doesn't get going till summer of next year, which is that kind of halving year. That's when it goes like this almost every day for 18 months. Around the time Larry was saying what he said, the markets were starting to figure out that the real problem was this excess supply issuance of bonds, and that inflation wasn't going up, but bond yields kept rising. And it was that moment that gold and crypto picked up very quickly, is that the more bond yields go up, the more they started going up. That correlation changed. And that correlation was driven by the fact, I think, that the market knew if bond yields are going to go up like this, the Fed or the government or somebody's going to intervene. So you get closer to the cowbell, the stimulus, somebody's going to do something. So I think that was a really big factor in it. And things started taking off. It's like, okay, if this bond market's going to get out of control, then you need to hide somewhere. And also, the banks had started going down again as well, if you remember.
Yes.
Same period. I think they started breaking down a bit. Let me see when that date was. I'm sure it's about the same. October 16th, like the banks had this little peak and then started dropping like a stone. And so, again, the market's job is to forecast the probability of stimulus or a flight to safety. And Bitcoin always does well out of it. So that's what I think started it off. And I think Larry saying the same thing around the same time that the banks turned around, also adds fuel to the fire. I don't know if there was any economic data out that day, but there was probably something around that as well. I haven't held much Bitcoin for a while because, I look at this in terms of network effects, and my view is that more things are being built on Ethereum. It's a richer, deeper network, more use cases, and over time, I think the value of the Ethereum network will be more valuable than the Bitcoin network, unless something changes. Now, ordinals and stuff like that, maybe, let's see. And so it's just from that thesis alone that I haven't held much Bitcoin. I've just thought it'll underperform. Now, it always outperforms in crypto spring. The least risk asset in that space always outperforms at first. Then what happens as spring turns into summer, you start getting outperformance of alts, and particularly the large alts first, and then the smaller alts later. So there's nothing unusual about what's going on. Also, very interesting to see the chart of of ETH Bitcoin, kind of long-term weekly chart. It's been a very interesting, that to me is an incredibly interesting chart, because I actually draw the wedge coming up from 2017 low to the 2020 lows.
We've got some juicy insights into the world of Bitcoin and altcoins. First up, our analyst friend, Rec Capital, dropped some knowledge on Bitcoin's price trends. They're talking about a significant trend shift and the potential support levels we might see on Bitcoin's journey. Now here's the deal. Rec Capital's got their eye on the 111-day moving average. It's like a crypto compass, and historically, before Bitcoin's halving events, it dances around this average. In 2015, it did its cha-cha around this line before skyrocketing and starting a bull market. Same dance happened before the 2020 halving with some groovy moves below the moving average. This moving average focuses like a ladder of higher prices as time goes on. Right now, it's around $28,000, but don't carve it in stone because it can climb. Rec Capital saying, get ready for a retest baity. A pullback to around $28,000 might be on the horizon, but it all depends on when and how Bitcoin's feeling. Here's the plot twist. This moving average, once a barricade, could turn into a cheerleader, giving Bitcoin some love and support. Bottom line, Bitcoin's gonna be breakdancing around that 111-day moving average on its wild journey. So we're looking at potential support around $28,000 or higher. But remember, the crypto roller coaster never stops. Let's continue our discussion with Raoul Pal.
Exactly, matches the business cycle framework that I've been using, the halving cycle framework. I've been more erring towards a repeat of something like 2015 without that red herring of 2019. So I think, we're at the stage where we're just kind of breaking out. Then we're likely to finish the year strong and then sideways for a while, sideways to down for a bit before it really gets going. So it's somewhere between the 2019 and the 2015-16 cycle.
And what do you think happened this week? Like, why this week all of a sudden did we get this wake up? Did something change? Did liquidity change? Did policies change? What was it that, is there anything, or was it just, we're just here and that's it?
It seems that there was some story that BlackRock had already bought some, buffer so they can sell ETF when it comes out. But I don't think that's a lot. But there's clearly new capital come into the space. We saw it with CoinShares, a few others starting to report inflows of capital. So that's new money going into the economy, and obviously a bunch of bored degens turn it into a lot of price rises. But then we had the other story that ignited. So Bitcoin had been strong anyway because of the ETF. ETH has been it was okay, but it's been pretty sideways for a while. The thing that really started igniting was both DeFi stuff. They came out of nowhere, really rallying, and that's often early season stuff. And the other was obviously Solana. Looking at previous cycles, how high above the previous high it goes.
Okay.
So if we look at, if you're looking at Solana now, or you can look at Ethereum in the previous cycle, I think of Solana very much like Ethereum in 2017. What's going on is interest rates are too damn high, and they have to issue ongoing bonds to cover the deficits, but they have to roll the bonds from last 4 years, from 3 years ago, 4 years ago in the pandemic cycle, from 1% interest rate to 5% interest rate, or 5.5%. And the problem is, to do that, you have to issue yet more bonds to pay for that. So we're just getting awash with issuance. And this has been my argument about the everything code, is that there is no way governments can issue bonds at 5% interest when you're 100% of GDP in debt, because there's not enough economic growth to cover it. So the central bank has to buy it. And what's happening is, here we are pushing the central bank to buy it. Now, whether Janet's doing that on purpose is like, Jay, you're going to have to take this. But I think there's a game being played, is like, okay, we'll show the stress, we'll create the stress, we need to cut rates, we can roll this debt at lower levels. And if we can find the right excuse, like a recession, we can push it onto the Fed balance sheet.
I don't know if you see, I'm trying to find that clip of Stan Druckenmiller talking about Janet Yellen.
That's right. About doing, in the past cycle, right? She had the opportunity to issue 20-year debt, 30-year debt, 10-year debt.
Yes.
They did short dated. And they've been doing this all the way through. And this is creating this economic cycle I've been talking about. So if you go back to 2008, everybody got the get out of jail free card of 0 interest rates. So nobody had to pay interest on their debt. That was like a gift, right? 0 interest rates. Every government refunded at 0, but for some weird reason, they did it between 3 and 5 years. That 3 and 5 year debt cycle just keeps rolling over. It's exactly the Bitcoin halving cycle. It's exactly the economic cycle. It's exactly the US election cycle. They're all the same thing. It's this super cycle, this everything code. And we're into that point of the cycle now where the balance sheet should start rising to cover the debts from the previous cycle.
Now let's dive into altcoins with the crypto millionaire Joe Perry's. He's the real deal, turning $10,000 into $500,000 in minutes. But here's the thing, altcoins aren't for the faint of heart. It's like a high-stakes poker game where you can win big or wipe out. Nelson's asking the big questions about the future of altcoins, especially with regulators like the SEC peering over. Perry says it's all about strategy and understanding. He's seen the roller coaster too, but believes in the big gains. So altcoins, folks, they're the risky thrill of the crypto world. Only invest what you can afford to lose, because this game's like a bull ride. Bitcoin, yeah, it's the main act, but altcoins are the underdogs that can surprise you. The crypto world, well, nothing's guaranteed, but it's a wild ride with big rewards. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.